Hello everyone. Let us examine the position of one of the biggest private sector banks in India, that is Hdfc Bank. Hdfc Bank is the most solid bank in India because of its solid parentage, Hdfc, and its belief in setting its quality standards very high right from the beginning, right from the word go. Now, what is the overview of this company? Hdfc Bank is the second largest private sector bank. Okay, it is incorporated in 1994, one of the oldest incorporations. It has successfully merged Times Bank with itself and Centurion Bank of Punjab with itself. And this, because of these things, it is now thinking in terms of maybe taking over Axis Bank. That's what the news says. So it is aiming at only spreading its wings far and wide. It has started very early going into insurance. It has taken over L&T Insurance. So it has got HDFC Standard Life Insurance, HDFC AMC, that is mutual funds, HDFC Securities or equities, and HDFC General Insurance also is there. So it is a leading player across all retail loan categories of the BFS sector, and it has got extensive branch network. It has got a large number of ATMs. You may have, even in places where no other ATM is there, if it is a commercially viable center, you will find a HDFC ATM. And it is very much into mobile banking, internet banking, phone banking, wallet banking, and its total customer base is about 28.7 million. Now, what is the strength of this HDFC Bank? The strength of the HDFC Bank lies in the fact that you need a very strong process of licensing from Reserve Bank to enter into that sector. So, the sector entry itself is a very tough job to get in. So, that is its first best benefit. Second is it has got 3,000 branches. The only one before the State Bank merger, maybe State Bank, Punjab National Bank, only other one or two banks may be having more branches than this, and none of, except ICICI Bank, none of the other banks have got this level of a branch network. And it has got about 10,000 ATMs in about 2,000 cities, and its branch network of 88% is located in Tier 2 and Tier 3 cities, and that's very, very commendable for a private sector bank. It has got 4.1% in deposits market share and 4.7% market share of the total banking system, including public sector and private sector. And it's got very good accessibility and wide range of product offerings, very much customer oriented nature. So it is very unlikely that people once who have gone into HDFC Bank switch over to any other bank. Compare, you just go to any public sector bank like State Bank and then go to HDFC Bank, the difference is very, very clear. On the face of it, you will get to know that how a private sector bank should be. So in case of, and especially because of the HDFC as being a parent, in HDFC Banks gets or markets the housing loans of HDFC also. Because of that, you will have a very large, say, customer base who tend to stick to HDFC and HDFC Bank rather than to move over. So it has got cross-selling, very large cross-selling opportunities to both the people in HDFC, customers of HDFC as well as customers of HDFC Bank. It sells life products, non-life products, broking services and things like that. Now let us see what are its financial ratios, how it is, right? Now in the financial ratios for a bank, first is the credit deposit ratio. How much of it, the deposits it is able to say deploy in credit. It stands around 83% or 78% in 2012. It's gone up to 83%. That's very, very high. It's very, very high and it's very good. And investment to deposit ratio has gone up from 36%. It is about 30%, 31 to 36%. That's also very good. And then cash to deposit ratio is about only 5%. It was 8%, is reduced to 5%. That's very, as near to the regulatory minimum that is indicated. Then interest expended by interest earned ratio is around 54. That means, get the idea? So it was 53, 54, it is constant throughout the 4 years. And other income to total income is about 15 to 17%. 15 to 17% is the income that is non-interest income earned by the bank. Non-interest income is supposed to be the income that you earn out of your innovative abilities, out of your customer servicing abilities, out of giving your products that are useful to the customer, right? And operating income to the total income is about 23% to 27%. Interest income to total funds is about 9%, 906 to 9.27%, and interest expended to total funds is 5%. So the interest income is 9%, interest expended is 5%, your margin is 4%. So 4 and above percent is consistently maintained 4.25 and 4.19, between 4.14 and 4.25, and is consistently net interest margin. That's a very, very good margin to run for a bank. And non-interest income works around 1.8 to 1.6%. That's also a very good ratio. Operating expenses to total funds are come down to 2.6 and between 2 and 3%, 2.6 to 3%. Even though the most efficient bank would be where the expenses are around 2% or 2.5%. It is very near to 2 to 2.5%, at 2.6%. It has succeeded in reducing its expenses, operating expenses, from 3% to 2.6%. In the present scenario, reducing the cost of operation is a very good achievement. Then profit before provisions to total funds is around 3.05 to 3.29%, and net profit is 1.68 to 1.89%. It is the net profit has actually increased, and return on net worth is gone up from 18%. It is around only 18%. It had gone up to 21%. It is now again at 18%. So this particular bank is a very, very solid as gold. So if you have any doubts, remove all of them and go and buy Hdfc Bank. That's the best bank and the best scrip that you can buy in the present scenario. All the best.